Hello guys. I hope all is sharpo. It's been a while since I gave you a video, and if you're new here, just make sure that you subscribe and you watch this video until the end, and then I want you to decide if you have ever seen a channel where they do a thorough top-down analysis like we do here. So we're gonna start with Nasdaq today. Remember, every Sunday I try and give you a chart of something that you can maybe take advantage of this coming week. I hope you had a great weekend, and so hopefully we'll have a great trading week as well. So let's get started. So as always, we start at the top. We always do we just have a quick view of the higher time frame, just so that we have an idea of where the price could be coming from and where it could be headed to. So this is our monthly chart, and on this monthly chart, remember, our monthly support has been hit and the monthly resistance hasn't been hit, so we still have enough space to go there. We are now, we moved up from that support. We went up there, but we didn't reach the resistance, and then the price suddenly started coming to the downside. And remember, for as long as the support is not broken, we're not going to predict that it is going to be broken, especially the ones on the higher time frames, right? We don't predict that they will be taken out. We rather, trade towards them. They get taken out. I mean, they get hit. You wait. If you get reasons to go against, like to the upside, you will take it again. If not, then it means the price will just come down and penetrate and take it out. Then you can say, oh, that support has been taken out, meaning the price will have higher chances of coming to the next one. But for now, we cannot go and say the price is going to do this. It's possible, but we don't have anything that will say this support is going to be taken out, which means this will remain the nearest support for as long as it is not penetrated, and this will remain the nearest resistance. So there's your support and there's your resistance. So you can see that the price is playing near the support, and at the top it left a decent amount of space before it could hit the resistance. So that's all that you have here on the monthly chart. So let's do the weekly one and just see if the structure has changed. So on the weekly one, if you have been on this channel, you remember that we always have this trend line. I always give reference to this trend line, because if I just mention that this zone here has done something, you won't agree unless you visualize it, which is why I always add this trend line. So this here, where you have the horizontal line from here to here, it's your weekly support that gave you a move up and broke the trend line and broke the area of resistance. So this support, even when the price was still moving up, we did comment on it and say that should the price come back to it, it will be a good area for you to try and buy from it. We're not saying, when the price was moving up, that's the thing. When the price was still here, we didn't say it was going to come down. We are just saying, should it go down, we will do that. The same way, should it be broken, we will trade like this. You see, we don't predict such things. You see, so now that it is approaching our support and we know what this support has done, this support is the one that, it looks very nice. Look at the takeoff move. It looks very nice and very strong, and it has never been hit before. It is still very fresh. You see, if I can put it like that, it is still very fresh. The price is approaching it. So this is where you can, should the price get in there, this is where you can expect some reactions. Maybe this will be a pull. It will push until what? Remember, the monthly resistance was missed by this gap here. Maybe if we get to recharge and sort of pull back towards this weekly support, we can then take off and hopefully reach the resistance. But even if we are saying it might do that, if you get reasons to go long and then it's going up with you, you cannot ignore this. You cannot ignore this. I mean, why did the price suddenly turn here? Because when you're looking left, we don't have anything that can say we turned here because of this. Maybe if you want to say the old support broken now might become the resistance, but that alone is not enough. So you see, which is why you must always question, like, why did it turn there? Which means if you get a reason to go long, this might also be your exit point. If you are trading the big time frames, this must be your exit point. This will be the max one, because it's at what? the monthly area of resistance. So that's all that you have on this time frame though. So these ones, don't focus on them, they were drawn on different time frames. So what you need to take from this one is that your trend line was there, it was taken out by this support, and now the support also, it took out the resistance. Now the price is pulling back to that support. Should it dip into it, maybe on a Monday, should it do that, then it means from there we're most likely gonna see it bouncing like that. So when the price gets here, if it gets here, you must search for trades to go long, because you know what this zone has done. If you don't get the trades to go long, it means the price will break the zone. If it's broken, everything will reset. Now we have to do it over again. But for now, until that happens, because we don't predict it, we are saying currently this area of support on weekly has got higher chances of holding and pushing the price back up. So which is why I'm saying when the price gets inside it, the best thing to do would be to search for trades to go long. That's it. That's all that you have on this weekly time frame. So let's move down to a different time frame, which is what? Our daily time frame. And one thing that you need to remember, I know some of you would be trading using things like RSI, things stochastic, and you'll be saying the price has been falling for too long. This is oversold. It needs to go up, but you still see the price doing this, even with the oversold status that you have on your thing, on your indicators, which is why you can't rely on those things, because it can be oversold, remain there, the price is still dropping, it will still stay here, it will not go further, it will still stay here oversold. So meaning you'll be buying because you're seeing oversold, and then you see the price still continuing to the downside, which is why on this channel I never show you indicators, because I don't use them and I don't believe in them, you see, because I want us to make decisions based on what you are seeing on the chart. That will never lie to you. You cannot just say because the price has been falling for 5 days, then it has to go up. What makes you think it can't fall for the next 5 days, like 5 extra days? You see? So you must wait for the structure after that falling of whatever days to say, now look at the structure. The movement to the downside, the bears are running out of steam, then that's where you can search for trades to go long. We cannot just say because the price or an indicator says we are now oversold, we need to start looking for trades to go long. You are going to be disappointed. So even in the mentorship that I have, I don't talk about indicators. I just keep it simple. I just, we only talk about what we are seeing on the chart. That is what we are going to use to make our decisions. That's it. I don't want to complicate things. So I make sure that everyone that is in the group, it's as simplified as possible. I don't want to complicate it. The indicators, we don't even know who created them. You see? So we are going to make our decisions based on what we are seeing here on the screen. So let's see what we have on daily. So on daily, all has changed. The day, we remember when we were still at the top, and then we had this, and then this was our support, and it's just that it's not drawn to scale, but this was our area of support somewhere there, and it was touched. If you can see here, it was touched by this, it pushed up, but the fact that it failed to go up, remember when you're moving up, you're supposed to do this. You see, it's very rare that the price will move up like this. Momentum must be very strong for the price to move like that, but otherwise it will be moving like this. Like this. You see, that's how it's supposed to move. So the day when the price, did this, it went up, came back, but it failed to go up and continue with the higher highs. That's when the bull started to show some weakness. Because even before that, if you check here, their zone was taken out. We thought maybe when they hit this bigger one, they will try and redeem themselves by what? By going up and taking out the high, creating a new high. But they failed to do that. So that's when the price came down, and then it removed the trend line and a couple of support areas on its way down. That's when you saw that, yes, the bulls are out, you see. And then they continued pushing. Even these ones, you can see they are outside. You cannot look for trades to go long here if this is your execution. But if maybe you were trading this as your highest time frame, once you are inside, based on how it is reacting there, you could look for short-term trades or intraday trading. But you cannot buy here and then say I'm gonna hold for 2 weeks. Because of what? You are trading your daily as a higher time frame, and that time frame is to the downside. So why do you want to hold for long term? Which is why you're going against the bigger trend. So that trade must be a short-term trade. It must be an intraday trade. That's the trick, because otherwise you cannot execute on M15 and then end up saying I'm going to hold for a very long time, whereas the other time frames, the bigger time frames, are pointing down. You're holding a buy trade. You're going to end up interfering with their structure. The price is going to bounce and then come hard, and then it takes you out. You see, when you know that the higher time frame that you're trading, it's in a certain direction, but you want to go in the opposite direction, make sure that it's a short-term trade. So that's when it started moving to the downside. All these support areas, this one almost respected, but this didn't do anything. It just went up there. It's more like, when you're going down, like I said, you're moving like this. So it was just a pullback. As long as this pullback does not threaten the structure of the base, then it's nothing. You see, the bulls, whatever that they did here, didn't accomplish anything. It didn't break any structure of the bears, which means we cannot say when we go to buy trade here, you're going to hold until that, because this time frame is not going there. You see? So that's where you need to be careful. Make sure that you are just intraday trading. And then now currently on this time frame, this is our nearest support that is holding, and this is our nearest resistance. So you can see that what actually happened here was that let's use this one. The price came into the support, and then the support rejected the price, right? And then the price went up until the nearest area of resistance, which is why I'm saying when you're taking trades, knowing very well that the higher time frames that on your sequence are not going to the upside, you need to make sure that your trade is just an intraday trade. So this to that and out. You cannot just say I'm gonna hold and then hope that it will do that. What makes you think that the bulls are that strong that they will do that if they don't have any backup? If their this time frame is moving to the downside, why don't you just take your trade, make it an intraday trade, and exit at the next opposite structure? In this case, we tested this, we went up to the resistance, and then we pushed to the support. We are back at the support again. You see? So here now it's only a matter of say which one is going to be taken out. We have got the resistance here, and then we've got the support here. You see? So you can lean towards the bears, because remember, they will become stronger once they touch their weekly area. Once they become here, once they get here, they will become much stronger. Yes, they can try and push up from there. It's possible, but we are saying based on this current structure here, they've got a very high chance of taking out this, and then coming to this before taking off. You see? Simply because even if you check the current, the past two, what do you call this, candlesticks that you have here, you can see that, yes, this is your support, but if you are at the support, and we know that at the support, that's where we find more buy orders. They are more than sell orders. So meaning, once the price gets inside there, we expect it to find liquidity in the form of those buy orders and then push up strongly. So if that was the case at this support, why is it that if the buyers are more than the sellers here, why is it that they are allowing the sellers to sort of engulf their structure? Because this is a bearish engulfing. So it's very rare. Whenever you see a bearish engulf, we expect these ones at a zone that has got more bears than the bulls. So like a resistance, when you hit the resistance, and then the bears are the ones that are going to engulf to the downside, because they're very strong there. So now when they're showing strength at the support, it's not a good thing. It's not a good thing for the buyers. You see why I'm saying, it can hold, yes, but based on the current structure, the fact that they tested this support, they went up, they couldn't even take out the resistance. The bears still pushed down, they engulfed the thing. They are candlestick, so it's just that it's a Friday, but based on the current structure, they can still continue until they dip inside just around the 11680. Then that's where you know that if they do that, it means now they will be, remember that 11680 is this one. It means now they will be inside this support, which is a weekly one. It is very fresh, it is very strong because of what it did. So that's where you can expect the pullback. So we're not saying from the current zone we can't retest or we can't go up. We can, but remember, we tried before. We tried testing here. We went up. We just hit that resistance. It rejected the price. The bears even engulfed what the bulls were trying to do. So when the bears engulfed them, that, it's not a good sign, because usually at this zone we expect the bulls to do the engulfing, because it's their zone. We expect them to be more than the sellers. We expect them to be, to defeat the sellers and defend their zone. In this case, that's not what we are seeing here. It's the bears that are sort of engulfing the structure of the bulls, which is why I'm saying, based on the current structure, I wouldn't be surprised to see the price coming down to at least that. I'm not saying when the market opens, you should just go and sell and hope that it will do that. No, that's not how you do things. You still need to drill all the way down to your smaller time frames where you normally take your trades. It's just that here I'm giving an example. I mean, I'm giving the sort of my view based on what is happening here. You cannot currently sell and say you're gonna exit here, because of what? This guy is not yet broken. Until it is broken, it remains active, so you can't sell against it. All I'm saying is that maybe you should wait a bit, right? Unless if the bears or the bulls on their thing, on their other time frames, they do something like this, then you can say, oh, whatever that the bears were trying to do looks like the bulls have reversed it. Then that's when you can start to trust the bulls again. Even the bears, to trust them currently, like right now, it's not a good thing, because you don't have space before you hit the opposite level, you see. So that's why sometimes not taking a trade for a day is not a bad thing. Just to wait until the things are even more clear. But to give my view, I'm saying, because of what the bears are doing at this support zone, they have got a chance to go down. When you are here, that's you have got more bulls now. The force to the upside here is going to be very strong, because of what? It's your weekly zone that is fresh, and it's a very big and strong zone. So from inside here, maybe the price it might even penetrate until it comes to this one. But anywhere inside that weekly, you can look for trades to go long. If it penetrates like that, it means you get your trade. This will become your nearest resistance if it doesn't form another one coming to the downside. But all I'm saying is that around this, yes, the price can hold and go up, but based on what they did, they failed, so they can end up being swallowed like that. You see? So when you're looking for trades here, you need to be careful. You need to make sure that the structure is clear before you can take trades. So let's check the H4 quickly and see what is happening here. So this we can remove, because you can see that it was respected nicely there. We can remove that. We can remove this one as well. So let's start. We know that this one, it's our daily support. We know it, right? So let's just start and see what is happening on H4. Because even if I do this, it's not going to be very helpful, because of what? Inside this daily that you're talking about, the H4 would be somewhere there. Somewhere here. That's your H4 support inside your daily support. So that's your nearest support. The nearest resistance is this one that rejected the price. All right, so now let's see. So what happened was that the bears, they had their trend line here. I hope you'll agree with me here, so that we can conclude just like what is most likely going to happen here. So they had their bearish trend line here, the bears, and that's when they dipped into what? The daily support. Remember this one? They dipped into the support. The support rejected them, and then at that time, the nearest area of resistance was this one. But this resistance, even though this time frame was pointing to the downside, it was not a good area for you to sell trades from, because now this is your H4 resistance. The price is bouncing from your daily support. You see? So it was not a good thing for you to do. But if you got reasons to go in here, maybe on H1, you could take that and then exit at the H4, because we didn't know that it was going to be broken. We're just saying it was not a good one for you to trade from it, but it is active. We can use it to exit our trades. So it was not a good one for you to take because of that. And another reason, like I always mention, is that when you have a zone, like for instance, you form a zone here, you form a support, you take off nicely with a strong candlestick to the upside. If the next candlestick comes back to the zone, we can't trade it. There is no imbalance, there is balance there. So we don't want that. We want the price to form the zone, play there before coming back. Then we can look to take it. So in this case, we just left to the downside with a strong candlestick. The next one came back. You couldn't take that. So for those reasons, you couldn't take it. So look what the price did. It then went up, took that resistance out. It took out the trend line. So now you are back at your support that took out the trend line, and it took out the area of resistance. So now you're gonna take it. It can give you, remember when you're doing the daily, we said yes, the price can hold from the current one, but you need to be very careful. So even here, if you are saying you're gonna take this as what, a break of a trend line, and then you mark it, and then a retest, and then you're buying it like that, you need to be careful. Maybe you should wait a bit, because of what I'm not happy with what I saw on daily. I'm not happy with this engulfing. I'm not happy with that. So yes, this that you're seeing here, it can sort of reject the price and go up until this, because this will remain active until it is taken out. So it can maybe be rejected until it gets there. But you need to be very, very, very careful. This is not a setup that you can just go in and risk it all. We understand what this zone did, and it is located around the daily one and stuff like that. Maybe this, you can take it as a shift, the momentum shift, but it's not a good thing. You need to be very careful there, because you can take a loss. Even this strong sort of engulfing to the downside towards your zone is not a good one. Not a good one at all. So if you try and take your luck there towards this resistance, you need to be very careful. But for me, I'll just wait for a day just to see what the candlestick is going to do. If it does this, you can see that, oh, that's not good. Then it has got a higher chances of getting to this. So, but if the bulls try and redeem themselves by engulfing that bearish candlestick that engulfed their kid or their candlestick, then you can say, now I can maybe say it's going to go back to that zone. Then I can take that. But I'm not going to hold until it does that, because of what? The structure on these bigger time frames does not allow me to do that. I can just say, maybe for that, I do intraday, and then I get to this, I exit, and then I watch again how the price is going to react from that. Because the only way you'll feel more confident in taking trades for long term to the upside is if you hit this weekly area of support. The daily, we can't talk about daily support areas, because daily is purely to the downside. So daily trades can be long term. But if I get to the weekly one, it can be long term, because of what? We remember that on weekly, the bulls were the last ones to break the thing and to even remove the thing. So far, whatever that the bears are doing here on this time frame does not break any structure of the bulls, which is why we're saying the bulls are still very strong. None of their structures has been broken should the price deep into their zone on this time frame. That's the only time you can look for trades to go long and hope that you can hold them for long term. So that's all that you can expect from this time frame. So this is basically how I do top-down analysis. This is what I'll be teaching in the thing that I teach in the mentorship that was currently started. We're done with group 1, and group 2, they had 2 lessons so far. So this is where we are going. I want them to be able to make decisions like this and say, based on what I saw on the bigger time frame, I don't think this is going to hold, or I think it's going to be a good trade, because even the other time frames, they are agreeing with what I'm trying to do. That's what I want. We cannot make such decisions where to enter, where to exit, based on a what do you call this, things like, what do you call them, stochastic and RSI, whatever. Because those ones, they will say overbought for a very long time, the price is still pushing up. There you're expecting it to drop, and then you see it's not dropping. But if you make your decisions based on what you're seeing on the chart, then you stand a greater chance. Because what you're seeing on the chart, if it's saying someone is rejecting the price, then yes, someone is rejecting the price. Because you can see the price action, it's represented by the candlesticks, not the RSI. You see, so this is what I teach, and I just have it from the basics until the more advanced stuff. So this is the number 0383. So this is the number that I use for Telegram if you want to contact me. But for now, that's all that I had for you with regards to the US 100 or US Tech or Nasdaq. So you can just monitor there when the market opens as to like what's gonna happen. So we will meet again in the next video. I can make another one, and then from there we'll just monitor maybe on Tuesday or Wednesday. We just check how it played out. But you need to be careful there. That's all that I had for you guys. I'll see you in the next one. Don't forget to like and to recommend the channel to your friends, and also to subscribe to the channel. All right, guys, I'll see you in the next one. Sharp, sharp.